Hi friends, this video is all about a very popular and a multi-bagger stock called CDSL. Back in 2020, the stock used to trade at around 250 to 60 level, and now it is trading at around 1800 level. So it has gone crazy, and this has divided investors into two groups. Group number one says that it is game over for CDSL. It is time to book the profit and exit the stock. Example of that is Standard Chartered Bank, who used to hold 7.1% stake in this company and have exited the stock, booked the profit by a bulk deal of 1266 crore rupees very recently. As a result of which, immediately CDSL prices dropped by close to 6%, and it came down to roughly 1675 rupees per share. So these investors think that it is a game over for CDSL. At the same time, there is a second group of the investors who believe that CDSL still has a lot of juice left in this stock, and that is why precisely in the last few days the stock has gone up to 1828 levels within few days of it falling down. So in this video, I will help you understand few critical points about CDSL, and you will not find this content anywhere on YouTube. If you watch this video without skipping, by the end of this video, you will have 100% clarity and you will be able to make a decision whether it's a game over for CDSL or whether it is party abhi baki hai mere dost. With that, let's get this video started. First critical point is, how does CDSL actually make money? You will immediately say that, Rahul, what are you teaching us? Why are you even creating this video? Because we all know that more demat accounts get opened, CDSL is going to make more and more money. But that is only 10% of the story. And this is where I keep telling people that go and read the annual reports, go and read the company's business model, and then only you will understand where the growth is coming from, where the money is coming from. Allow me 3 to 4 minutes of time and you will get 100% clarity. So what you see on my screen is that the company is earning their revenues from 5 different sources. Source number 1 is 27% of their business is coming from AII, which is annual issuer income. So all these companies such as Hindustan Unilever, TCS, Infosys, all these listed companies and even unlisted companies who are keeping their shares with CDSL in the dematerialized form, they are paying annual subscription charges to CDSL every single year. And this is a cash cow for them because CDSL's technology is allowing the stocks to be transferred from one demat account to another demat account, and that is pretty much deal done and dusted. They are going to get this money. So that is 27% of revenues coming from annual issuer income. How this segment is growing, let me show you data as well. So if I show you the data, you will see that in the last 2 years, the number of issuers or the number of the companies have grown from close to 17,000 to close to 21,000 or 22,000, right? And if we do the CAGR calculation for that, it will come out to be 11.62%. So meaning this 27% of the business revenues are growing at 11% yearly rate in the last 2 years. Is it a bad or good? I think it's a decent growth. I don't think it is a skyrocket growth. And this is where revenue stream number 2 comes into the picture, which is 25% of the revenues are coming from the transaction charges. So whenever a stock is traded, there are transaction charges. Let's not go into details of what these transaction charges are, but I want to show you the data of how these transaction charges are growing, and that is where the company is growing at a faster rate. So what you see on my screen is number of ISINs. ISINs, you can understand, one ISIN means one transaction. So if we see the data for fiscal year 2023, you will see that the number of transactions gone up from 51,000 to 55,000. That is a growth of 7.86%. But last year in FY24, if you look at the growth rate so far, it has been from 55,000 to 64,000 transactions, right? And that is a growth of 16%. So what has happened here is that in fiscal year 2023, the growth was only 7.86%, but in fiscal year 2024, the growth seems to be doubled, 16%. And 25% of their revenues are coming from transaction charges. And this is where the majority of the growths are happening because more and more people are doing a lot of transactions, and that is why the revenues of CDSL are growing. But this is where the risk also lies. Let me explain to you. And the risk here is that if the number of transactions come down, the profitability, the revenue of this company is going to get hit. Let me show you the data as well. If you see Q1 FY23, there was a marginal dip in the transactions. It went down from 52,800 to 52,180. Marginal difference only. And that was because Nifty was down from close to 17,000 level to almost, let's say, 16,000 level here or 15,000 level. Immediately CDSL stocks started to falling as well. And if I show you that chart pattern here, you will see that CDSL stock was at around 1460 at that time, 8th of April 2022, and it started to fall down to 1100 levels because the number of transactions were reducing, and investors immediately knew that if the transactions are coming down, if the Nifty is coming down, if we are hitting a bearish market, if the market is crashing, then what is likely to happen? It is time for the CDSL stocks to come down because their quarterly profits are going to hit, and people immediately book the profit, come out of the stock, later on they can re-enter when the bull market comes. So CDSL stock has this cyclicity that you need to understand, that when is it good time to invest in this stock? When the stock market overall is in a bull run, that is a better time, rather than when it's showing a bearish downtrend. So please understand this risk as well. Third source of the revenues is coming from 13% from IPOs. So whenever a company comes up with IPO, they will have to pay certain charges to CDSL, and this is where CDSL makes money. If I show you the data about IPO, you will see that there were total 63 IPOs that were issued in 2021. That was the best year. We just came off the COVID and we were in bull market. That's where most of the IPOs were launched at that time. After that, 40 IPOs in 2022. 58 IPOs in 2023. The point again here is that if the Indian market is looking good, you will see more and more IPOs coming. If the market is crashing, then more and more companies will postpone their IPOs because they don't want to launch their IPOs in the bearish market. And this is again the cyclicity here, that number of IPOs will largely depend on how the Indian market is performing. And therefore, you really need to be careful in terms of what is happening in the stock market in India. If we are in bull run again, then what happens is that it is a good opportunity because more and more IPOs are going to come during the bull run versus the bearish run. So far, if you're liking this video, a humble request for you to hit the like button. Also, you can consider subscribing to my YouTube member community because I post in-depth analysis of stocks, mutual funds, and various other assets, and you're going to get a lot of information that you can make your decisions based on. With that, let's move to revenue number 4, which is 18% of the revenues are coming from KYC, which is whenever a new demat account is opened, then the brokers have to do KYC for the investor, and this is where they have to pay a fee, and this is where 18% of their revenues are coming from. And if you look at the data here, you will see that in the last few years, the demat accounts, the number of demat accounts have gone crazy, and it has crossed 10 crores for CDSL, and this is where 18% of their revenues are coming by charging the investors for KYC. India, with a population of 140 crore plus, I think there is still a lot of juice left, because more and more people are likely to join the stock market in the coming years. This 10 crore number might go to 20 crores in the next, 4 or 5 years time frame. And therefore, this segment of 18% revenue, in my view, will continue to grow. Number 5 is 17% of their business is coming from other sources. What are these other sources? Let me quickly show you. These are 3 components mainly. Number 1 is investment income. Number 2 is cash charges. And number 3 is e-voting income. So if you look at the e-voting income, you can quickly read this here, and it says that the growth is very, very weak in e-voting income. And if you read this, you will see that the cash charges have only grown by 50 lakh rupees here on a base of Indian rupees 25 crores. Again, that's a very, very weak growth here. All in all, the other segment, which is 17% of contribution, is looking very, very weak right now. There is not much growth coming here. So to conclude their business model, the main growth is really coming from the number of transactions, which is 25% of their revenues. 27% of their revenues, AII is looking only 11 to 12% of growth rate here. IPOs again are dependent on how the market is performing, what type of IPOs are coming in the market. 18% KYC is also growing at a very, very good rate because number of people joining demat accounts is growing at a good rate. Now let me present to you some positives and negatives of this company, and then we'll come to the valuation of this company. Now, 2 big growth opportunities that lies ahead of this company for investors like you and me. Number 1 is that by September 2024, many private companies will have to compulsory put their stocks into demat form. There are certain conditions for that. For example, the company's turnover must be more than 40 crores or their share capital need to be more than 4 crores. And secondly, it will only apply for those companies which are going to either transfer their securities or raise further share capital. So we don't know what is going to be the quantum of this opportunity, but all these private companies must mandatorily hold the stocks in the demat form, and this is where they have to pay the annual issuer charges that we learned in the beginning of this video, where 27% of the revenues are coming from that. So the size of this opportunity, management is not giving any indications right now. We will come to know by the September 2024. But let us say there are 2,000, 3,000, 4,000, 5,000 companies that may fall into this category, then they will have to pay annual issuer charges, and that is going to immediately improve the revenues of this company. Growth opportunity number 2, which many investors are asking their management, is that you guys are sitting on close to 700 crores rupees of cash. Why are you not doing buyback? Why are you not giving bonus shares? And this is not just one investor raising this. I have gone through their earnings presentations, and not just one investor, multiple investors are raising this query. And I hope that one day, very soon, this company takes an action and they give either bonus shares or they do buyback, which is going to increase the value of every share. And this is where the second opportunity may also be really good for investors. Now, of course, this is not a commitment from management just yet, but the possibility lies in the future. Let me now speak about very big risk that the company carries right now so that we have a balanced view as well. If you see their quarterly results, you will notice that their EBITDA margin is close to 72%. I have done a quick math for you here. 169 was their operating income and their EBITDA was 122. And if you do the math, it comes out to be 72% margin. It is an absolutely crazy EBITDA margin that you will see anywhere. 72% is very high. And when that happens, what happens is that SEBI, who is the regulator, will say that, hey, you guys are earning a lot of money. You have to now lower your transaction charges. And this is why, if my research is correct, their transaction charges were only increased or revised back in 2015. So there is a risk that SEBI at any point in time can turn around and say to these guys that you have to in fact lower the transaction charges, because we are always looking out for the well-being of the investors, and you're charging too much of money to either companies or the investors. You have to reduce their charges. And when that happens, their revenues and profitability is going to hit. I don't know whether that can happen or not, but I'm giving you this view of the risk that potentially lies with this company. Rahul, all this is fine. All this is okay. Now tell us whether we should buy, hold or sell this stock. And the reason I'm chuckling, because people only want recommendations. They do not want to know the analysis. They do not want to do research. And on my channel, what I want to do is promote analysis. I do not want to give a recommendation. Having said that, let's quickly have a look at the valuation as well. So if you see the PE and PB ratio of this company, CDSL is trading at around 53, while the industry PE is at 37. Now I think this is very tricky here because you can't really count IEX, an Indian Energy Exchange, where the energy is traded, to be the industry here. In my view, BSE might be a good reference point, or maybe CAMP services might be a good reference point. So BSE is trading at around 90 and the CDSL is trading at around 53, but that is at a higher level. Book value, if you see, it is trading at 15, which is very high in my view. Also, if you go to alpha spread and you will see the intrinsic value of this company, best case scenario is 1295. So it is overvalued by 29% from that perspective. Base case scenario is 961 and worst case scenario is 828. Overall, if you look at this stock, you will see that market is giving a lot of attention to this stock because there are growth potentials in this stock. But in my view, this may not be the right price to buy. Again, it's not a stock recommendation. I've given you a lot of analysis in this video and it is up to you to make right decision for your own investing. With that, I hope you enjoyed this video. I'll see you in my next video. Until then, keep rocking.